We all know that September is considered the worst month of the year for stock markets, but with a 50 basis point Fed rate cut and an end up positive week, what does this mean for markets through the rest of the year? Well, the results will absolutely blow your mind, and today we take a look at the data, the dark pool activity, and more importantly, the options flow that is now becoming a huge part of this market at their resistance highs. With all major indices and the most important sector in the markets all at gap fill levels, could we be seeing a major reversal? Well, in today's video, we'll take a look at that, along with the opportunities on the horizon for the months moving forward. Stocks, commodities, and cryptos, let's discuss them all right now together in the special weekend edition. See you in just a moment. Well, welcome back everybody to the Daily Show. This is our special weekend edition, and today we'll be looking at the good, the bad, and the ugly when it comes to the US economy, and more importantly, what's going on around the world in terms of large activity. If it's your first time here, remember to subscribe and smash that like button if you enjoy video content about markets. And let's get into the big story of today, because there's a bit of data to talk about, and then there's some massive dark pool transactions that I think will get you very excited, whether you're a trader or an investor. So here's some data coming through when it comes to non-recessionary Fed cuts. We know that we're at a new high, and that means that usually these have actually led into overall a 15% positive plus return. Check out our previous videos on that, or our X account, links in the description down below, where we've gone through JP Morgan and many other data points that have shown us that a cut at a high might be a little bit different, even when it's 50 basis points. But also the result of the last week was impressive. With 1 week results up 4 of 7 times overall, it looks like we're bucking the more recent trend when it comes to rate cuts. And it looks like we might be moving into a more positive outlook over the next 3 months, with similar periods actually netting anywhere between kind of 5 and even upwards of 17% over those periods when it came to market results. So could it be a soft landing or a no landing scenario? Well, of course, if it is, then you have to be looking at different market areas. Small caps have performed much better than large caps during these periods of time. And of course, the first 12 months have almost outstripped by 10% when it came to those facts and figures. We've shared these here before, but I thought I'd just show you the average non-recessionary and recessionary Fed cut when it comes to market returns. When it comes to the GDP though, it's one thing is clear: Goldman Sachs and many others, according here to Mike Zaccardi, are absolutely upgrading the GDP, and they see this as a huge positive when it comes to the overall market conditions. I think there will be still some volatility into October though, which we'll talk about in a moment, and that's going to give especially people that are trying to buy the dip or find new areas in the markets potentially some room for hope to get cheaper prices. When it comes to S&P 500 sector outperformance after, and this is of course not quantified by at the peak or not at the peak, these are the sectors that have tended to do better. And interestingly enough, consumer discretionary is the one that has benefited the most when it comes to these cuts. Now, I'd say that's a huge part because the cuts were happening often down in the lows during the recession, and that's turned the peak. But here's where things get really interesting. Margin debt. Yes, I track this quite closely. In fact, I use a few different tracking tools other than just this one, but this is FINRA margin debt, and it actually dropped down during the month of August now that we've got the data for it. Now, that's a huge component when it comes to markets. You never usually see this at peaks. So this is why we find it very interesting when it comes to where we're at right now. Margin debt actually dropping off, showing us that there is more room to run potentially when it comes to leverage and more importantly FOMO in these markets over the next 6 to 12 months, which is something in line of what we've discussed. We're about 21 months into what on average is a 31-month bull cycle, taking us into 2025. Now let's take a look at central banks and what they're doing in unison. Everybody is cutting. We're now over 50% of central banks actually cutting across the board. And you'll notice here, based on Ned Davis research, that when we're above 50, the actual gain on average of the markets is 8.38%. So we're not very restrictive in this market, of course, from central bankers' perspectives. And 63.33% of the time, we're in this kind of overall cut decreasing market. This shows you how broken the system really is, that we're sitting over 50% of the time in cutting or some kind of stimulating market environment, but that's the way economics are. Don't fight the system, instead stick with the trend like we talk about. Bank of America bull-bear spread went back to basic neutrality, as we of course see most members before the 50 basis point cut. And I think this week will be very telling to see what happens here. The spread of the overall sentiment reports were showing that most people were kind of getting more on the bull trend. And then of course the 50 basis point cut in many ways terrified a lot of people. And of course, rightfully so, it seems very terrifying until you consider the cuts happening at the peak, which is very different to where we were just a month ago, when of course we were down quite heavily in some of the major markets. S&P 500 bull market average returns, as we know, we're about 21 months to 23 months into an overall what should be a 31-month cycle. Of course, some bull markets go even longer. Take a look at these bull markets leading into things like the global financial crisis or 1987. They were incredibly long, and they would have been a great point to be part of if you could have. S&P 500 election cycles. Now, this is where a lot of people are wondering whether October is going to be volatile. We've shared plenty of Tom Lee Fundstrat data that shows that basically, yes, we should see volatility continue through October. And I think you've got to expect the unexpected. We could be setting up for what we call an island reversal here on the S&P 500, which we'll look at in a moment. And of course, we know that there's a lot of dark pool transactions. So it is possible to see some volatility and even declines into October. And you might say, well, we're not following the same path, but we did actually see selling coming into August, which is similar to other years. We've seen upticks through the month of August into September, which is again based on the buyback program. And then this is where we've disconnected a little bit. Usually moving more towards the downside last week, we didn't quite do that. And this is where I think markets will make or break whether they want to move through. The next 2 weeks, important and imperative when it comes to really tracking the October data. When it comes to overall breadth, you really can't hate this market either. S&P 500 mid caps and large caps, according to JC Parrott's over on the X platform. You can see here new all-time high. So Parrott's there believing that markets are still finding breadth, which we agree with. And as we've already stated many times before, if we have a new trend, it's rising and breadth looks good, the data points are in favor of that medium-term bull, that person that wants to hold the markets for a couple of months, with basically pullbacks being buy opportunities. This is really what we've looked at. I mean, during that fear that we saw in August, what are we doing? We were buying the dip. Everyone was worried about the carry trade, and probably not correctly so. I mean, you have to know what to focus on. In our advanced course that we do offer on the channel, links in the description down below, we talk a lot about the cyclical nature of debt and why it's so important to follow it. But let's have a look now at the overall ratios. The one thing's for sure is we're probably in what we call late cycle investing, lasting anywhere between 1 and 2 years generally. We go into this period where we kind of disconnect from normal reality when it comes to ratios. And you'll notice here that things like financials are starting to creep up there a little bit more on where they have been over the last couple of years. This is because the debt markets are increasing. We're seeing more small businesses taking on debt. We're seeing more people in general being a bit more confident. And that 50 basis point cut, if anything, will give people more confidence to potentially continue to spend. And this is where the interesting factors come in here. You know I love Sharpe ratio if you've been watching the channel for a while. Here are all of the Sharpe ratios over the recent times. And you'll notice that some of our favorites, gold and utilities, are actually giving Sharpe ratios better than the S&P 500. And of course, you know I love that. But high yield credit up there, and Mike Zaccardi here sharing this chart, and I agree, high yield credit is something we must be watching quite closely over the next 12 months. Managed market funds as well. Assets peaks usually 9 months after the first rate cut in the past 5 cycles, something to be noting and of course to be looking at when it comes to the charts. But let's get into some large transactions. My favorite stock in the market, getting a monster on it just into the close. Yes, we had OPEX. Yes, we had a huge amount of options activity going through, but you'll notice here quite a lot of potential sells at the highs here. Microsoft putting through one of its largest transactions in recent years. The S&P 500 ETF also putting through some massive dark pool transactions just before selling off more into the close period. And of course, we also had some large transactions coming through from Tesla at the 243 high. Now, of course, we dropped past that point and we're now above 230, which is kind of an overall bullish thing. But you can see here someone clearly was doing a massive transaction. We also have semiconductors getting monstrous transactions right where the gap fill happened, which led into a short. So we know that we're at that critical res now. We know that market, particularly the structure that's forming here, will be important. And this is where we can start to figure out what the market might be up to. Let's have a look here at the most important sectors during Friday. It was actually defensives, utilities, our favorite, and of course gold, our second favorite, up there in the front, and that's nice to see. Bit of selling through regional banks and home builders, which is of course something for us to watch. And over the last 5 days now, you wouldn't believe it, energy is now number one, along with regional banks and metals. So of course we've seen the metals uptick, but this is not what you would usually see into a massive bear market. Regional banks, banks in general, energy, these markets really shouldn't be turning to the upside if it was going to freak out completely. So especially if we do pull back in these situations, it's suggesting that there are buyers underneath in somewhere in this market. So this is where the most important sleuthing comes in. Will we see a sell leading into October? More importantly, will we see a continuous kind of volatility trend happen in markets? Well, one thing that's starting to appear is we're becoming overbought. So we did have a nice run. We've obviously run to a new all-time high, but we are starting to get a little bit overbought. And what we could be forming is an island reversal. So this is something to be in mind. Is the trend still up? Absolutely yes. If you're holding for multi-months, I don't think it's something to be terrified at this point. I think actually the market looks pretty good. But we can see here there's one of the largest gaps. In fact, the largest gap since 2020 was formed from this close to this high, thanks to the 50 basis points. And overall, we've now sat there creating two doji candles, which effectively means the market's very happy with where it's at. Now, when we start to break down the structure using the futures market, you'll see here, I had this little line for day trader bear zones. And we talked about this together and we said, well, maybe if we take this zone quickly, we might rally back up. And this actually could create kind of more of a sell-off effect back into this area. Now, if it does end up gapping down on the Monday trade, that could be a very interesting point because if gap down will activate what we call an island reversal. And that's something that a lot of people do consider in markets. Obviously, going against the trend is not an easy thing to do, but we have seen those large dark pool transactions. So where then are the buyers? Where are the bulls kind of sitting in this market? Well, the first bulls, of course, will be sitting right around that 56.06 to 56.16 zone. And as we'll see in options as well, the 5,500 level is the main zone that we're often looking for. The 61.8 retracement now of the overall last run. Some great levels to be looking at into October if they are to occur. Let's see if that's possible though. Well, this week we're still in positive gamma. And you'll notice here we closed at 57.03 in terms of the S&P 500. And you can see here all of the options calls floating around this level. 5,700 is a huge zone to be holding, because it also happens to be there on Tuesday. So we've got calls all over here on Monday, we're in positive gamma. We've got calls all over the place at 5,700 on Tuesday. And if the markets get through those areas too much, they can again feed on each other. And for the end of the week, you can see here we've got the 57.50 zone being the major call level. So if we manage to get through 57, let's say 10, 15, start to see a real push, the gravitation zone by the end of the week is going to be somewhere around 5,700. On the flip side to that, we still only see puts when it comes to now October, especially here. When it comes to these points, we basically see everything sitting around 55.15, 5,500. So we know that the put walls, that is where is the drop going to happen if it really falls through, 5,500 has to be that gravitational zone. Let's move over to CTAs. Silver CTAs continuing to buy up, which is what we suspect. It looks like there is a movement into the metals. Gold absolutely flying, which we're very happy about. I'm sure a lot of you guys are. And obviously silver improving as well, which is something we've been discussing. NASDAQ CTAs seem to be behind the curve when it comes to this run, so that's something to watch. And we can see here that NVIDIA continues to remain as a 120 call wall. So basically, whenever NVIDIA gets up to 120, it seems to be having problems around 120, 121 to breach through. If it manages to get through, it could go on an explosive move. And of course, that's a similar thing to what we saw with Tesla, which now that we've expired has 250 as the gravitational area. So if that sell, well, we have to assume it's a sell when it comes to the big Tesla position. If the markets push up and keep going higher past 240 into the 250, that becomes the most likely on the top end. And on the bottom end now, we'd have to think somewhere around 230 is going to be where we have a little bit of buying pressure. So Tesla seems locked between 230 and 250 for now, with most people, of course, into the upper range. So just before we jump into the charts and we look at all the key levels that you should be watching right now, I want to say a big shout out to the sponsor for today's video, which is of course Tiger Brokers. Now, Tiger Brokers has been working with us for a while and offering you guys, especially the Australians out there in the viewer audience, some extra specials. And they have informed me that you can only get the 7% fixed rate for a little limited time now. I think it's up to around 29th of September. So if you're interested in taking advantage of a pretty high rate, considering where rates seem to be going, then certainly look at it. And make sure also to be aware that Tiger just won another award from Finder and CanStar. They've been consistently winning awards. Remember, from Australia as well, if you want to trade one of the best markets in the world, which is the US market, they've opened up 24/5 on several stocks and positions, and this just continues to rise up. So as you guys know, I love new features, and this is something that Tiger Brokers has been adding to the charts, as we've discussed before. They've now added analysis features, forward PE, and of course you can track your favorite stocks such as Nvidia here. You'll also be able to click on the financials tab and then see the EPS updates for earnings. And this shows you whether you're tracking on target or not, and it'll be a great instant tool to really see whether the stock is cheap, expensive, or something else. Check them out in the description down below if you're interested, and as we mentioned, it's just another reason why we like them. They're constantly updating their software and listening to feedback like yourselves. So let's now take a look at the charts and see what's been happening on the markets. And of course, we have to be open to the idea of volatility continuing to remain quite spiky and kangaroo into October. There's a decent chance that we will get a pullback in October, and that thing means basically we shouldn't really be having too much FOMO. Of course, we saw the initial reaction after the markets to being bullish. We saw, of course, the island reversal potential here now in the markets, and we're open to pullbacks being buy the dip style situations when it comes to the overall charts and analysis. Remember, we did make a new all-time high. That's pretty important. Consumer discretionaries versus staples have also remained quite calm, which is a good sign of late cycle. Remember, they've been stuck now for almost a year, which is pretty normal to what we would see. But I like this chart, high yield junk bonds. It looks like junks are absolutely ripping. And this shows us that there is a healthy risk appetite, although there's not that much margin in the markets, a healthy risk appetite towards the upside. This breakout happened before the overall FOMC, so again, it's been happening for a little while. And I think high yield junk is something that we'll be watching, and we always have, quite closely over the next coming year to really see whether there's any freakouts in that market. Another one has been home builders. Home builders made all-time highs, although they do look like they're a little bit temporary topping right now. They continue to squeeze out extra growth, and that shows you that realistically people are feeling still quite bullish about the underlying. Again, with financials, that's a strong sign. Now let's look at the dollar. It looks like there could be a little bit of still dollar bulls in this market, and this is at the most important line. Remember, we closed right around 150, which is on our important line, and that means that we could go either way. Could go bullish, could go bearish. Small time frame structure actually is looking possibly to the bullish end, which is a pretty hard call to make when it comes to what you're looking at, because of course the trend is quite down. But this is a fairly important level for the dollar index. We've seen it reject the 20 moving average every time, which is a perfect sell area. And if you get through this 20 moving average, that's where swing traders will start to say, oh, maybe the dollar is going to improve for a little bit. And that's contrary to what, of course, you'd think about in the news. There's no doubt the Federal Reserve, we believe, is going to continue to drop the dollar over the next year in terms of what they're trying to achieve. But short time frame traders may be looking towards the bull end. What about copper? Well, copper continues to bullish up move. It has probably become a little bit overbought, but we're looking for still 450, 460 from copper. And this is a very nice move overall. And the other market that we're starting to look at is, of course, iron ore. And this is one that we're watching for China recovery or non-recovery. And at the moment, it's in a downward channel. You can see here quite weak through the end of last session. And this is something that I think is worth tracking as well. But copper on the improve. Gold, absolutely ripping, actually hitting into our fib extension here. Very important level for gold. Maybe this might be where we start to see some significant consolidation, but we think gold is still underpriced. Why? Well, we've had 3,000 on it for now like almost $1,000 an ounce. So we're obviously still moving up, and it's one of our higher conviction style trade investments that we've been talking about in the channel for quite some time. So make sure to follow along as well if you haven't already, because yeah, that's been a banger. Let's move over now to silver. Really cool. Great to see it up here at the highs. Obviously no breakout past our 31.26 level, but certainly hit into it. We'll be watching silver very closely, because if silver breaks out, could go to 34.60, And yes, I know some people hate this thing. Hey, it's been doing damn good, and we like silver at the moment. Obviously, I want to see it break through that zone. Oil managed to close okay on the weekly, not quite at our day trade buyer level on the bottom here, but we're looking towards 74 a barrel being the major resistance next. And it looks like oil basically wants to make it up there. What about Tesla? 232 plus break on the weekly is considerable. That's something that, of course, a lot of people have looked at for a while. And I think with Tesla, you've got to consider, is this some form of inverse head and shoulders? Left shoulder, head, right shoulder. News quite negative about the stock at the moment, yet the price action went more towards the bullish end. We know that 250 is where the calls are. So we could get kind of like a pullback back down to the 230s, maybe some buyers around here, and 250 is going to be where most buyers are going to try to take some profit. At this point, we're in an inside candle, but overall the trend is now up a little bit more on Tesla than it was last week. What about semiconductors? They hit the gap. We had a suspicion that this would be better than Nvidia when it came to doing the analysis on the charts. It certainly was, and I think they're in a tough zone. So semis, of course, yes, we're bullish over multi-months, but for now, I'm really skeptical about 243, and I'm looking for semis to show us the way forward by breaching this level and showing us that this market really wants to ramp further. At the moment, you can see there's a lot of neutrality coming through the stocks, and in particular, Nvidia and semis are not really leading. So we'll see whether it can get through that gap. Let's move over now to Chinese market. Hit a major take profit zone if you've been in the scalps or the day trades recently. Well done to anyone out there. Again, it's contrary to everyone else's feelings and belief, and that's why you don't read the media and listen to those ideas. You follow the price action. This is a pure replication from our day trading masterclass. It's an absolute banger. It did really, really, really well. And of course, I'm very happy with that percentage. Now, I'm looking for even more. I'd like to see more out of this. This is a market that is gone through a recession and is maybe coming out the other end. Again, contrary to the news, the worst happens, yet the base starts to come through. And that's something that you always are looking for. And remember, we were very negative on China up until probably about 8 months ago, to maybe even 10 months ago when it comes to these charts. So HSI doing some improvement, nice resistance. We'll see whether it can get through there this week. And I'll be watching iron ore closely with that. Speaking of iron ore, the Australian market obviously continuing up, but needs iron ore to turn to the upside. We do have a lot of red dirt in Australia, so it's very important for this market to see relief in that, and we'll see whether that can happen. Some good encouraging signs in stocks like Rio on the Australian market and US markets last week, and we'll see whether it can hold. US 2K at resistance. So you notice here all these markets, the Qs at resistance, the S&P 500 at a potential kind of island reversal, and then of course the Russell 2000 at resistance. Now if this market gets taken out and goes higher, so we actually break through this 2300 zone that we've been struggling with for so much time, we're looking at 2430 as the next level. So this is such an important area. If pullbacks do occur, of course the Russell could get down, and it may be a good opportunity based on the fact that after the Fed rate cut, if you believe it's non-recessionary at this stage, then that is a market that often does quite well. NASDAQ futures, you'll notice they're trading right around those highs, and of course we've been using in particular the Qs here to really demonstrate the importance of these major levels. The downward trend line did get breached last week, so you can see here these lines. We came up to the next point of resistance, and we've suddenly got stuck around here. So one of the things that we were playing with as an idea is maybe a breach of this zone and then a pullback down to around here later on into October with a rally from that. That would actually be a really good non-recessionary path for markets. Of course, recessionary paths are more like this. So they start to create negative structure. The structure of the next 3 months is all important. Let's move over to crypto. Bitcoin hitting into the highs here of 64.2, finding a little bit of resistance. They do look a lot better. The crypto coins look much better. Bitcoin in particular breaks through 64 in a bit. That will be a big trend starter potentially to continue the upward trend. And 68K remains the major issue for Bitcoin right now. Getting through that, well, I'm thinking we're all thinking all-time highs at that point. But we've been on the bull run so far. Sentiment switch looks good. Pullbacks to be met, we would think, by bull demand. And the overall trend is looking good. Watch that 64.5 to 65K run. For the news this week, well, there's a little bit coming out around central banks, but we do have our good friend Jerome Powell annoying us on Thursday. So that's going to be at 9:20 a.m. So make sure to watch that one. And then, of course, as we scroll down, we've also got one of the key metrics the Fed uses, which is core PCE price index, and that's coming out on Friday. As we know, it's going to be down to quite a few things. We will have a special newsletter out this week as well, so make sure to check that out in the links in the description. And for the Melbourne people out there, for anyone that wants to come to our free trading event, I think we're down to about 10 tickets left. So if you want to do it, it's free. You can check it out. Sydney event now open. I can confirm it's going to be October 30th in the evening. So yeah, you can sign up for early reg there as well. And we'd love to meet you. Thanks, guys. And remember, if you're interested in more information about the sponsor of today's video, which is Tiger Brokers, check them out in the links in the description down below. There are links for other people around the world where Tiger offers services. But for the Australians, remember, I did manage to get you a couple of little extra bonuses if you sign up in the next couple of weeks. Thanks so much, guys. Bye for now.